company post the merger.
Hello and welcome to Midcap Radar on CNBC-TV18. I'm Ekta Batra. With me is Reema Tendulkar, and it's turning out to be a session which is weak at this point in time. We have barely seen any kind of recovery from lows. 18,074 currently for the Nifty. We have the Bank Nifty, which has been underperforming, down around 1% odd. So it is across the board in terms of declines that we've seen. Maybe a couple of stocks which are managing to hold their head above the water include something like a Divi's Labs, which is up around 1.3%. A couple of the auto stocks, such as Maruti, which is not doing too badly, up around 0.8%. But it is largely, you'd have to say, a lot of the defensives which are managing to hold their head above the water more than the other stocks this afternoon. But we have a lot of ground to cover in terms of what we should be doing with technicals and a lot of stocks in focus. So let's welcome our first guest on the show. Sudeep Shah joins in from SBI Securities for a technical check on the market. Sudeep, hi, welcome to the show. Well, how would you approach the weakness that we're seeing in the markets this afternoon?
Yeah, good afternoon, Ekta. See, what's happening is that despite the markets, they were trading in a tight range in the last 4 sessions and they're not able to cross 18,250 to 70. And that is the reason we have seen re-emergence of the selling pressure that we had seen 7-8 days back. So, and one more thing, what has happened is that with today's fall, markets have breached the last 3 sessions lows. So that is kind of indicating that the trend is weakening, and markets now Nifty could trade in a 17,900, 950 kind of range on the downside and 18,250 levels on the upside. So this could be a broad trading range. And what we're witnessing as per the derivatives data is also that a lot of significant put writing is happening in 18,000 strikes, which indicates that this zone of 17,930, 950 could be held as a support. And on the upside, with today's fall, 18,100, 18,200 calls are also witnessing severe additions. So that is giving us some kind of range bound with a negative bias kind of a view on the market, with 17,900 and 18,250 as the range.
But at the current juncture, is there a trade, or would you wait for this range to break on either side?
If we have a trade on a couple of mid caps now. Despite the mid-cap index not performing as what we had expected, now a lot of weakness is also witnessed in the mid-cap index also, along with Nifty and Bank Nifty. But there are a couple of stocks that are standing out. Now, once a couple of them are the first one is Carborundum Universal. Now, that is a refractory stock. Now, what we're seeing is this stock has given a fresh symmetrical triangle breakout, and it has been supported by rising volumes in such a market, which is adding strength to this breakout. So this and also the stock is trading at a 4-month high. It's trading above all its moving averages on the daily as well as weekly charts, which is indicating a better relative strength. So what we feel is that this stock can be bought with a 895 stop loss and a 1,000 target on the upside. The second name is RCF. Now, of late, we have seen a lot of buzz the fertilizer names, and RCF is a top pick amongst that. So stock, if you see technically, that has witnessed a bigger rally from 110 to 140 in the previous week, and it was consolidating in a 3-4% kind of a range within the last 3 trading sessions. But today it has broken above that range, and it's sustaining above its 20-day exponential moving average also. So we feel that there could be a continuation move on the upside in this stock, and this can be bought with a stop loss of 130 and a target of 150 on the upside.
Okay, all right, Sudeep, we're going to leave it on that note. Thanks very much for joining in and speaking to us. Well, yes, a lot of these broader markets